All right. Been a little while, but I figure it's time for a market update. So I think I always confuse people because they say this is going to be a December market update, and then I go and I speak about all the numbers that I was able to run for the closed out month of November. So when I say December, just so I don't receive any messages, no offense to the people that have messaged me about this, but your December market update is a prediction based off what happened last month and the prior months, and historically what has happened in December for the previous few years. So I did something a little different this time. Blame it on having a newborn at home and being tired. But I mean, I still do my own data analysis. But I took all these numbers and I said, I wonder what would happen if I put this into chatgpt, if it could take old data and find patterns and predict the future. And it did. And I was a little surprised at what I found because I asked it to predict what's the best month to sell. And now adjust that prediction based off any news you find regarding future interest rate projections. And so what I found was that, well, first let's back up a little bit. For the month of November, our median price point was around 1.3 million, 1.298, which was just down 0.04% from the following month of October. But inventory was down 40%, which is the biggest slump we've had in inventory in the fourth quarter since I started running these numbers back in 2020. The only time that we had a higher percentage for inventory drop was in April of 2020, after we got the news in March that the country was shutting down. So that should just kind of signify how low inventory is right now in Huntington Beach. That being said, interest rate reports came out this morning. Everything is still at 6.75%. I get my little updates from US Bank, from Aaron and John Levin. Super helpful just to kind of on a daily basis know where we're at. But anyway, so price points really haven't changed too much. And if you go back historically, well, last year they actually increased a little bit from October to November. And in the year prior, it did a little bit of a decrease. So like we're in line with what things traditionally happen year over year as far as price points. However, because of the drop in inventory, I think that's something ChatGPT took and said, well, we're not going to decrease as much as we do throughout December and January because of limited supply. That with slightly lowering interest rates should give us a slightly stronger December, January, and February. But again, who knows? I know there are a lot of people in a situation where they feel kind of like trapped, I guess. So like I bought my house back in 2016, I think like 695, 700, something like that. And it's probably worth about 1.3. And if you go back to even just back in 2020, the median sale price was in the $700,000 range, and the median sale price now is about 1.3. So it's almost doubled just in the matter of 5 years, which is crazy. So pricing is, everyone I think has had this thought, well, it can't keep doing this. It's going to go down. It's going to go down. But at the same time, when you see like such a limited supply based off high interest rates. So like this is, I think, a little counterintuitive. With rates where they're at, you would think it's going to affect buyers, which it does. But it also affects a lot of sellers because you have a lot of people that are locked into a 3%, a 3.5% interest rate. So I think I'm at like 3.5%. Maybe even 3.75. But if I were to rebuy my house right now at current interest rates with 20% down, my mortgage would triple. And so even though, yes, I would like a new house, like I'm not going to make that decision. It seems like a poor financial decision. And I feel like a lot of people are in that boat. And until we see rates decline, I don't think that's going to change. And people think, okay, well, when rates decline, it's going to increase buyer purchasing power. And so there's going to be more bidding wars and the market's going to shoot up. And I go, well, no, not necessarily, because there's going to be a flood in inventory because it's going to unlock all these sellers that have felt trapped in their homes for the last couple years while rates have been in the 6 and 7% range. So I think things would probably stay pretty balanced even if we do see lower interest rates, which hopefully we're going to. That's the projection. We've had a couple Fed meetings where they've actually lowered rates, but then on paper, nothing really changes. So I do think that we'll start hedging down towards the high 5%, maybe low 5%, if anyone's watching this that has some control in the government, by the end of 2025. And I think that's like a good number. I think somewhere between 4.5 and 5.5, based off how you qualify, is like perfect for where a market should be and just for like normal sales and just normality, because this real estate market over the last 4 years has been anything but normal. So I also took in some data quarterly, going all the way back to 2011, just to see, well, what happens in election years, because it's felt very slow this year. And all the agents I've talked to have agreed, like, there's less activity now than it's felt like there's been in previous fourth quarters, year over year in the past. And what I found was that there's not much of a fluctuation, not when it comes to politics, at least. And like, I've had this experience, and like the anecdotal story I always tell people is like, there's some conservatives in Huntington Beach, just in case you haven't seen the news and you don't know that. And back when Obama was elected, I was in real estate, and everyone wanted to sell. Like, same thing, but flipped. With Trump getting elected, oh my gosh, everybody on the left's like, the country's gonna explode. I'm gonna sell and move to Canada. And what typically happens is nothing. Like, the market keeps doing what the market usually is going to do and does, regardless of what the media is saying about politics. But the one thing that did create a little bit of a change was interest rates and like economic stability. So obviously things feel expensive right now. I can't be the only one that thinks like gas and groceries are higher. Like, my wife and I have increased our grocery budget, or we'll try to keep it the same, and we're just not getting the same amount of food. And for people that don't have millions of dollars, like, I think it does affect your day-to-day. It affects your spending. It affects especially such a large purchase like a home, cars, everything. And that's something that I believe is what is affecting this slower market more so than anything that could be happening politically. But I did find it very interesting that ChatGPT, when I plugged in my quarterly data, it projected, I don't know, you can't see this, I'll throw it up above me, but it projected that the market was going to continue to grow. Inventory was going to continue to decline, with the exception of quarter one in 2025, where it projected we were going to see even lower inventory, which means less sales. But at the same time, you kind of have that like adverse effect on supply and demand. So, which is why price is actually going up in quarter one, and typically they don't. They usually settle a little bit in quarter one. And then we have the days on market staying roughly around a 2-week absorption period. So, made some cute little charts for you guys just to show. I'm going to put that above, but this little bubble that you see when you're comparing the sales price versus interest rates, that's what should happen. If you go back into April, May, and June, and even July of 2024, they should be creating bubbles. So like, when interest rates go up, sales should be going down. And when sale prices get driven up, it should be because of increased affordability, and you should see interest rates going down. But there was like some awkwardness in the market here. But things seem to be kind of normal now. Rates went down, prices went up. I also made another fun little chart that shows inventory versus price, because interest rates and inventory, supply and demand, are the two biggest factors that affect pricing and the real estate market, not just in Huntington, everywhere. It's going to show the last one, interest rates, like affordability and how that affects buyer purchasing power. And then supply and demand. This is like your basic like economics 101 chart. And when supply goes down, prices should go up. And so if you kind of follow, again, these should be doing opposites, but they kind of go in line on a little bit of a delayed schedule. So we just have not had a normal market for a long time. And so I'm hoping we can find that sweet spot with interest rates around the 5%, give or take a few, fractions of a point. And then I'll have to find the piece of data, but when I inputted this all in to ChatGPT, and sorry I saved this for last, but I asked, what is the best month to sell? And it gave me two answers. It said July consistently had the highest amount of units sold. So the most amount of business gets done in July. And comment what you think your answer would be for the overall average highest median price point. And I think you'll be surprised. I was surprised. I was going to guess July as well. I just think, school and work and like people not wanting to throw more on their plate. Like, I feel like I'm so busy all the time. I coach my kids' football teams. Have a development that I'm working on down here on Main Street in Huntington Beach, Shore House. If you don't know, check it out. It is awesome. I'm a new dad. I just have a lot going on. I don't want to think about like having to move or to do anything, but if I am going to do that, it's probably not while I have to get up, get my kids ready for school, have my wife assisting. Like my wife would be the person probably packing most of the stuff and doing a lot of the organization because I have to work. And it just sounds like a lot. So if I was going to buy a new house, I would do it in the summertime. So I always thought July. But do you know what it was? It was March. March had the overall year-over-year highest median sale price. So there's your little breadcrumb takeaway from this market update. If you are planning to sell and the holidays are just too much for you, and interest rates are still high and it just doesn't make sense, but you know you're going to be moving soon, start preparing in January, get ready to come on the market as a coming soon in February, and probably list, because you have to remember that these numbers are for closed sales. So typically if the median days on market is 14 and you have about a 30-day escrow period in there, you want to come 45 days earlier. So it might even make sense to list in early February. But doing so now and doing so in January is going to lose you a small percentage, unless you have to sell and you just can't make your monthly payments. Then obviously sooner better. Who cares if you don't make an extra 4 or 5%? But if you want to get the highest bang for your buck, list in mid-February this following year. All right, that's your market update. I hope it was helpful. If you have any questions, I can dig deeper on some of the other data that I have pulled for Huntington Beach, but shoot me a DM and I'd be happy to help you out.